Yo, what's going on, y'all, and welcome back to the Aray Show. So last Thursday, Dave Portnoy just launched his own ETF under the ticker symbol BUZZ or Buzz. And technically that's not true because he doesn't own this ETF. He's more the face behind it or just a shareholder, to be honest. And he actually has no relation with the actual owners, Vanek, at all. But I mean, when we think about this ETF in general, all we're going to be thinking about is Dave Portnoy. He's just that much of a voice and a character that's pretty much all we can get behind. But with that out of the way, honestly, it's a really cool and interesting concept, but we'll get more into that later on in the video. And also, in this video, we're going to be talking about the holdings that Buzz has, whether it's a good investment or not, and whether I'll be investing in or not. So with that out of the way, let's hear what the Buzz is about. Damn, I gotta take that out. So what makes the Buzz ETF so special? Well, when I first heard of it and I heard that Dave Portnoy was behind it, honestly, I thought he was going to be out there picking stocks. So I had an idea it was going to be something like DraftKings or Penn Gaming, but in fact, it's something completely different. What it is it's basically an algorithm that's run through all these different types of stock chats, like Reddit, for example, or stock tweets, and they gather investor sentiment. So basically, the stocks that people are talking about a lot and the stocks that people love. And then using these algorithms they want to find out which one of these stocks has a good return on investment. So they're basically combining the stocks that the people love with return on investment. And I thought that was a really cool concept. And at that moment, my thought process was it's probably just going to be a bunch of meme stocks like GameStop or AMC. But to be honest, I mean, we'll get more into that later on. I don't want to spoil the holdings yet. And the last thing that they do is they kind of adjust these holdings every single month. So it's kind of on a month to month basis, which is pretty cool. And it's a total of 75 holdings. So basically, every month they'll adjust it based off of investor sentiment and these return on investments. So behind the scenes, this is what the Buzz ETF does to select their holdings. So the first thing that they do is they make sure that all their stocks and holdings are actually US large cap stocks. And this is something that I agree with. At first I thought it was going to be a bunch of penny stocks or risky investments, but I'm pretty happy that it's going to be just US large cap stocks. Once they pick out this category right here, all they do is they collect data from a bunch of different platforms. So these are all the platforms right here. And of course, they've got a bunch of suspect ones like Reddit or StockTwits, this one being the biggest one out there. But I mean, I can't really say nothing because I'd be using it too, you feel me? But I mean, other than that, they've got a lot of notable ones like we got Morningstar and all these ones over here. And then once they get all this data and collect it, they analyze it with their algorithms and they determine investor sentiment. Once they determine the investor sentiment, they basically rank them and then they select the top 75 stocks and do whatever they have to do. So this is all the stuff behind the scenes. So before this ETF launched, Dave Portnoy actually came out with a video talking about the ETF and pretty much everything that it does. And one of the things that he mentioned, and I'd love to play this video, but I don't know if I can because of copyright. So I'll leave a link in the description. So if you guys want to check out the full video, it's about 3 minutes long. But anyways, one of the things that he says is this ETF, if it was launched a year ago, would actually outperform the S&P 500 by more than 40%. So I got thinking, what is in its holdings and how was its performance? So let's take a look at that. So the Buzz ETF performed at a 77.79% in return on investment in the past year, which is insane, and no one can complain at all about being up 78%. And if you take a look, it's outperforming the S&P 500 by 40%, just as the video is explaining. And like I said, you can't complain about that, but there are a few caveats that I'd like to explain. The first one is this started right before the crash, which means that this 77% is probably not attainable and sustainable for every single year. So you're not going to see that. So if we take a look at the 3 years out, you can see the 3-year annualized return rate is 27.45%. And then if we take a look at the 5-year rate, same thing, 24.5%. So at this point, I'm kind of just nitpicking because it is outperforming the S&P 500. So if you take a look, if you think about it, if you invested 5 years back, your $100 would have turned into approximately like over $300, which is a huge return. And in S&P almost doubled. So at the end of the day, this ETF has been doing better than the S&P 500. But I mean, if you're expecting 77% every single year, that's not going to happen. And one other thing is, it's entirely possible that somebody could have just picked in top stocks that have been performing well over the past 5 years and just kind of reverse engineered it to make their returns look a lot more appealing so more investors would get into this Buzz ETF. And honestly, I don't think that that's what happened here. It's just something that could possibly have happened. But I mean, let's take a look at the holdings, and this is going to be the fun part. So here are the holdings of the Buzz ETF, and honestly, I'm quite surprised on some of these holdings. For example, their number one holding is Ford Motor, and I used to invest into Ford Motor before the pandemic. I had them as a dividend stock in my dividend portfolio, and I'll leave a link in the description. You feel me? But I mean, other than that, like I get that there is a little bit of investor sentiment because, of course, if they hit the EV market, there's going to be a lot of investors that are just going to hop on. And Ford definitely has been a long company, a company that's been doing this for years and years. And they do have a great future if they do hit this EV market. But I mean, number one overall holding, that to me is a little bit surprising, I will say at the very least. But yeah, let's take a look at some of the other holdings. So we've got Facebook and Twitter, and these are both two big social media companies, and that's probably going to account for a little bit over 6.5%. And I mean, I don't really have too much to say about that. I think they're great companies, and Facebook is part of Fang, and you can actually see Fang all over here. So we've got Facebook, Amazon, Apple, Netflix, and I don't believe that they have Google. I might just be missing it. Don't see Alphabet anywhere in here. I mean, I'm sure I'll see it eventually, or if not, I guess they don't have it. But I mean, that accounts for a big portion. So they've got 3% for that, three, so that's 6, 9, so about 12%. And if they do have Alphabet, let's just say about 13, 12 to 13% is all in this Fang stock. So these are just all safe stocks. And I didn't expect that to be this ETF. I mean, yeah, of course there is investor sentiment. A lot of investors love it, and they do return great. So I guess that could be like the anchor. But I mean, it was surprising, and there are definitely great stocks in here. I mean, we've got Disney. I love Disney. They have Plug, Tesla, and I wish Tesla was a little bit higher because I feel like the investor sentiment for Tesla is a lot higher than it is. DraftKings is another great stock that they have in here. They've got Salesforce, another one that I'm a big part of, and I own a lot of Salesforce as well. They've got Coca-Cola. So they just looking at it right now, they do have a few dividend companies in here that are not the highest growers, but they do pay dividends. So we got Coca-Cola, and they do have, let's see, Walmart's another great dividend company. Visa's a great one right here. Let's see, Qualcomm's another one. They got their bank stocks. I'm not too high on banks, and if you guys know in my dividend portfolio, I actually dropped my bankings, so I don't have any more banking stocks. We've got some Zoom, Virgin Galactic, which isn't doing well at all, and I'm sure that they probably will sell out of this too, just because Chamath also did. Oh, there's Google right here at 1.4%. Square is a one that I'm pretty big on. Nvidia is a nice one. So yeah, they've got some dividend payers in here as well. Some banks, a lot of fintech companies. They got PayPal, Square, AT&T is another company that pays a nice dividend. Nice, they've got Uber. Honestly, these holdings look pretty great to me. It's just the way that they worded it with investor sentiment is not exactly how I was picturing in my head. This is actually my second time looking at it. The first time was a quick glance. I want to get more of my, general reaction to it. But I mean, let's keep taking a look. So we got Nikola. That's one that I don't really agree with. I get that there's investor sentiment, but I mean, if you're going with EV, you might as well just bump up Tesla more or add in maybe Neo. I don't see Neo anywhere. I could just be missing it, but Neo is one that I believe has a lot of investor sentiment, and it's one that has a lot of growth potential as well. Roku is one that's in Arc as well. So Roku is a great company. Also wish this was bumped up more. And I get that they have 75 companies, so it's probably hard to allocate more. Activision Blizzard, I love that company too. It's a great dividend payer. CVS, Etsy's dope. I love Etsy. Caterpillar is one that I own in my dividend portfolio as well. Enphase, Enphase is a great company, and it's one that I probably will do a video on in the future. I own it in my growth portfolio, and I've been talking about that. If you guys follow me, that I'm gonna be showing you guys my growth portfolio. So stay tuned for that. Subscribe if you want to see more. But I mean, other than that, these companies look really great to me, for exception of a few. Like you guys know, I'm not really too high on the banking companies, and then of course Nikola's Nikola. But I mean, other than that, great. After taking a closer look at some of the holdings this ETF has, it's a lot more well diversified and well rounded than I thought it was initially. I mean, we've got all different type of companies here. We got our traditional dividend companies, Coca-Cola, AT&T. We've got the traditional FANG companies as well. I mean, Facebook, Amazon, Netflix, Google, all these different type of companies. Got Apple, we've got recovery plays, American Airlines. We've got chip companies, AMD, Qualcomm, bank companies, and also fintech companies, pharmaceutical companies. I saw Moderna somewhere in here, EV companies. It's pretty much anything you can think of. I mean, look at this: energy companies, recovery companies, Walmart, Morgan Stanley, Visa. These are all different type of stocks, and it's definitely well diversified. So should you invest into the Buzz ETF? Well, first things first, I'm not a financial advisor. I'm just some random dude on YouTube. I only got 67 subscribers. Shout out to them. I appreciate y'all. And yo, if y'all like my content, I mean, leave a comment, like, subscribe for me. But I mean, shameless plug out of the way. If you guys are a big supporter of Dave Portnoy and you believe in him, then I think it's definitely worth looking into. A lot of these companies that he holds into this ETF are very, very safe, in my opinion. Apple, Netflix, Tesla. But I mean, do your own research and believe what you want to believe. He sounded really enthusiastic about this ETF. He was all over it with his videos and his profile change and everything to do with it. And on top of that, he does get a fee from this ETF. So I'll get into that a little bit later on. But with that being said, he said that if this ETF does not outperform the S&P 500, he'll take his cut from this ETF and donate it. So he won't keep it for himself. And that just kind of proves how much he really does believe in this ETF. So we did a lot of talking up on the Buzz ETF, but there are a few things to look at before investing into this ETF. The first thing is the expense ratio is 0.75%. That's pretty common for an actively traded ETF, but I mean, it's the same as the ARK ETF. And do I think it's going to grow as much as the ARK ETF? Probably not, but nonetheless, 0.75% is a lot that you have to pay for an ETF. So a 0.75% expense ratio is not going to be a make or break type of situation. But I mean, if I had to pick between this ETF or an ARK Invest ETF, I'd probably go with the ARK Invest ETF just because I know a little bit more about Cathie Woods and what she's trying to accomplish. But also at the same time, they have a lot more history than the Buzz ETF does. But I mean, it's fairly new, so we'll have to see. But other than that, there is one other thing that I gotta point out, and that's their sector weighting. So earlier I did say it was well diversified, but if we take a look at the sector weightings, we can see that IT or the tech companies are about 25%. So almost a quarter is just situated on one weighting or one sector weighting. And that's kind of a lot. If anything were to happen to the sector, basically 25% of the holdings would be affected. But you can't really have the best of the best. It makes sense that a tech company is usually associated with growth, and that's exactly what this ETF is looking for. They're looking for ROI or return on investment, so you can't complain about that. One thing that I do have to mention that I gotta complain about is I wish there was a little bit more in real estate. If I remember correctly, Simon Property Group was in there, or Simon Group Property, whatever it is, I don't know. But that was probably the only REIT that I saw in there. And I mean, yeah, we don't have too many REITs, but there are a few other real estate companies that I wish were in there. For example, EXPI or Redfin or Zillow. But at the end of the day, can't complain. It does look great. This is just me nitpicking at this ETF. So am I going to invest into the Buzz ETF? Well, right now I currently own no shares of the Buzz ETF, and there's a reason for that. It's still too brand new, and there's a lot of holdings in there that I'm still kind of waiting on just to see how they're going to pan out. And the allocation is something that I actually don't agree with. Some of the companies being a lot higher than some of the other ones. I kind of want to wait a few months just to see how they're going to change up their structure and see how this ETF will perform over the long term. But other than that, I definitely think it's ETF worth looking at and possibly investing into. Just right now, it came out a few days ago on Thursday at $25 and it's currently down. But there's a lot that's going on right now with the market and everything that's going on. But it's definitely a topic for another video. But with that being said, I definitely can see it running up. 70% again, who knows? Honestly, it might happen. It might even double to $50. This low price point is definitely very attractive, to be honest. But I mean, at the end of the year, it could be up, it could be down. But in my opinion, I definitely think that it could probably go to $40 maybe. But it's just a guess, who knows? I really don't know anything. Like I said, just a random dude on YouTube. So with that being said, that's pretty much all I have for you guys on the Buzz ETF. Let me know if you guys are thinking on investing in it, or if you guys already have, or if you guys are just going to pass on it. And guys, if you found any value in this video, or you enjoyed my content, or you thought my corny ass jokes were funny, please leave a like, comment, and subscribe. I'd greatly appreciate it. Shout out to all 67 of you guys that are subscribed currently. I appreciate it. I'm trying to get to 100 subs by the end of the summer, so if you guys could do me a favor and leave a like, comment, and subscribe, I appreciate that. Let me know if you guys are new or not. And guys, remember, everybody eats.